Lots of earnings that are out right now. We have Amazon that's come out. We have Coinbase. We have DraftKings. We have Airbnb. Just as I'm talking right now, Apple earnings just come out. So what's the deal? What are we expecting here? What can we glean from these earnings reports from a technical analyst standpoint and try to make decisions for what's going to happen tomorrow and what we can expect in the days ahead? So order of what I'm going to go through here. I'm going to go through Amazon. Then I'm going to go through Coinbase. Then I'm going to go through Airbnb, and then we'll get Apple. The reason why I'm leaving Apple to the end, I want to give it a little bit of time for the price action to shake itself out some. But overall, Amazon has seen a pretty good beat so far. They're actually all seeing beats. It's just a matter of how the price action reacts to everything. Make sure to like and subscribe to this channel down below on YouTube. Make sure to click the notification bell so you can be notified anytime I'm doing one of these or a short or a podcast episode that's dropping on this channel. All good stuff on here if you're new to this for the first time. Put your questions down below. Let me know what charts you're wanting me to look at, what stocks you're going through. I go through all of them. I'll answer all your questions to the best of my ability, and we'll go through all of them as long as it takes. And so yeah, make sure that you're posting the questions down below. All right, let's get to Amazon here. Amazon earnings, 65 cents versus 34 expected. That is a pretty big beat right there. Operating income, 7.68 billion versus 4.72 billion. That's also a beat. Outlook in sales, 138 to 143 billion from Amazon. Expected on Wall Street was about 138.3 billion. That's also a beat. You also have on revenue side, you have 134.4 billion versus 131.5 billion. That's also a beat. So overall, really good earnings report for Amazon. What does the chart show us, though? So let's go straight to that right now. Amazon, you can see here we have a bull flag that has formed in recent days. Now, let's take away the aftermarket price action here and just look at what we were dealing with coming into today. Bull flag pattern hadn't yet confirmed. Now, let's look at the post-market price action. You can see the price action is outside of that. So what we're looking at for tomorrow, if this price action holds through the conference call, is a break or a gap above the bull flag pattern, which will leave it to the potential for a fade. Why that's important is AMD. Do you remember what AMD did back on Tuesday? AMD had a similar bull flag pattern. We talked about it. And when we were going over it in the post market, this stock was trading at $123, $124 a share. It looked like it was going to be a huge gap higher. Instead, we got a little bit of a gap higher and it faded all day. It was a nasty sell-off. So AMD had good earnings. But you could also see the same thing. It's similar chart pattern. You could see the same thing unfold in Amazon. I'm not saying that that's for sure. I'm not trying to be a perma bear or trying to be a Debbie Downer. What I'm trying to tell you is that there's the potential there that you want to be aware of the fact that just because it had a really good earnings report doesn't necessarily mean that it's going to hold this into tomorrow, especially once the conference call gets underway. Other things that I want you to be aware of, this rising trend line. You can see we got a perfect bounce off of it. Technically, everything looks really nice. I wish this was price action that was not happening because of earnings, because as a lot of you know, I won't hold a stock through earnings, not a swing trade at least. I will always sell my trades before earnings because it's too much of a volatile session to try to hold overnight. So this one from a technical standpoint, though, set up really nice. I mean, you got this rising trend line, you got the bull flag. Both of them are bouncing off of the trend line. Prices bounce off trend line, breaking through the bull flag pattern. Nothing not to like right there. But one thing that you also want to be very cognizant of in the days ahead is this massive resistance level. So if we get a good rally out of it tomorrow, this resistance level goes all the way back to 2020. Yes, that is a long time ago. And what you're seeing here is price going back to revisit it. Now, the last time it revisited it was back in August of last year. It went right up to that level, and then it had an extremely hard sell-off, creating a new lower low, going from 145 all the way down to 80. I'm not necessarily calling for that right here, but I do think that something kind of like with the Tesla chart that we've seen, where it hit its own resistance going back to 2021 and then had a significant pullback. We need to be aware of the same thing with Amazon. This is a heavy resistance level that could see a rejection in price as it gets closer and closer to this 143, 144 mark on Amazon. So going forward into tomorrow, what we want to watch for, one, does it pull an AMD stunt where it looks really good today, but it starts to fade really quickly at the open tomorrow and people start booking those gains? The second thing is, if it does take off, what does it do as it gets closer and closer to this 144 level? Can it break through it? If not, and if you see a Tesla-like reaction that I just told you about, that might be a good reason to want to go ahead and pull back on those shares. So the other thing, if we do get that pullback, then we want to start seeing, does this trend line hold like it held today and yesterday? If so, that could be a good opportunity to get long on the stock. If it can't hold it, then I really don't want nothing to do with this thing going forward until we get a much more legitimate bottoming price action. So that's with Amazon. The other earnings report that came out today, Coin, you have a negative 42 cents earnings per share. It came out versus 78 cents, negative 78 cents as was expected. That was a beat there. Then you got 707.9 million in sales versus 643.36 expected. That was also a beat. Then let's go ahead and pull up the chart on this one and just jump right into it here on Coinbase. On this front, you have a bull flag pattern that has formed in recent days. Now, this isn't showing the aftermarket price action yet. Actually, it is. It's just, this is actually how fast it can change. If you look in the left-hand corner here, it actually caught me a little bit off guard. When I was looking at this chart last before I went on air, it was actually trading really strong and much higher, almost to the tune of like 10, 11%. Now we're actually trading lower by 1.3%. So that's how quick the earnings can change on you. Still trading in this bull flag pattern. Want to watch it to the downside here. Does it break below that bull flag pattern? And if it does, then you want to start thinking about, okay, do we get a retest of this basing price action here? This would be all the way down into the 60s. I think that would be a significant pullback that would take a very long time. I don't think that's going to happen overnight. But if you start getting continued market weakness like what we saw yesterday and a little bit of today, that could very well happen, especially in a stock like Coin, which is very volatile. If it can recoup, then what I'm looking for is, all right, can we get the breakout above 97? Then for some people, it's not going to be my cup of tea, but I would probably be looking at putting a stop loss somewhere below $88. I don't like that wide of a stop loss. You're getting into the 10% range, which is a reason why I probably won't even take this trade setup. But for some of you who like that kind of action and expect a 2-to-1 return that would give you 20 to 22% in return, that might be a thing for you guys. But overall, Coin, I don't think it's a bad chart right now. I don't think it's a good reaction necessarily to give up all those gains so quickly, but you want to be careful of it and watch it in the confines of this bull flag pattern and whether or not it can break out of that tomorrow. And thank you to Ryan Fairchild, man. Glad you're here in the chat room. Again, put your charts down below, or not your charts, but your stocks that you want me to look at. I'll do a technical analysis on it. As many of them we get, I'll be here. Sometimes you give me a little bit. Sometimes you guys give me a lot. So it all depends on you guys. All right, the next one that I want to look at here is Airbnb. Airbnb, 2.48 versus 2.42 expected on 2.48 billion versus 2.42 billion. That was a beat. 98 cents versus 77 cents. That was also a beat. What does that look like on the charts? Go ahead and pull that up. Right here, you have a pretty significant sell-off, 4%. What did it do prior to the earnings? It was down about 2.5%. So you're not talking about a significant drop. Combine it with the regular price action, yeah, it's pretty significant, but it has bounced off the lows at 131. You have this rising trend line here. That is nowhere close to getting tested yet, but you also have this resistance level or support level underneath that very much is in play. So if this stock continues to sink and after hours and into the open tomorrow, watch this 128, 129 level here. It's also going to be in conjunction with the 50-day moving average for the most part. If it can test that level, bounce and hold, that could be your sign to get into the trade. You also have a nice double bottom pattern that's been playing out going all the way back to mid last year. So with Airbnb, double bottom price action in play, pull back here on a pretty significant drop. And even over the last 4 days, it's been a pretty significant sell-off going from 154, 155 all the way down to currently 139. But if you get it back down to 129 and it can hold that support level, even better. If it cannot hold that level, then the area that you want to start targeting next would be this 113, 114 level. Now, let's get to Apple. Apple had a big earnings beat here. So 81.8 billion versus 81.55 billion. Then you also had 1.26 earnings per share versus 1.2 earnings per share. So it's not something that it's a big beat in the sense that it beat both top and bottom line, but it's not something that you'll necessarily write home to mom about. Apple, I didn't even think the estimates were going to be that hard for it to beat because they were pretty generous. But after hours, what do we have here? We have this rising trend line for Apple. And this one goes all the way back to January. This is probably the best rising trend line in all of stocks right now. And it got broken yesterday for the first time all year long. So then you go into the regular trading session today, you finish about 0.73% down, can't reclaim that 20-day moving average. That 20-day moving average, this green line right here, has also been a really good support level for the stock for a long time. You can see where it held it back in July. You can go back here to May, where it held there. It bounced off of that level, bounced off of it back at earlier that same month. It has been a consistent level for the stock to be able to bounce off of, as well as with this purple rising trend line that goes all the way back to the January lows. But like I said, yesterday it breaks below it. It closes just below the 20-day moving average yesterday, and now we're getting a little bit of follow through. Now, with its earnings being out, you would think, hey, maybe the stock should rally. Not so much, because now it's down to 1.5%, so it's about doubled its losses from today. And we're looking at much more of a significant retest of this 50-day moving average, something that hasn't happened again since January of this year. So some pretty significant developments happening for Apple. If this stock continues to pull back and we start seeing a much bigger wholesale sell-off, and this is probably the biggest sell-off since February that we've seen in Apple, it's going to have a dramatic impact on the overall market. I would say a significant one, particularly with the NASDAQ 100. If you get the Apple to pull back, it's going to pull back on a lot of other stocks too. And then as a result, it could create a nasty snowball effect for the overall market, S&P 500 as well. Where would be probably the best protection if that happens? If you have to be long, probably in small caps, because they don't have the exposure to Apple like what the NASDAQ 100 and the S&P 500 has. So if this sell-off continues, where I want to start looking at for a potential bounce opportunity, and this is not in the today, tomorrow, next week per se, unless you get a significant market correction, you're looking at 169, 170. That would be where I'd want to load up on some shares to try to play that bounce. That is an old support level that has been very significant in years past. It did break through it with very little. It tested at one time, and then it broke right through it on a gap higher. That was probably from the previous earnings report. But if that stock does pull back, 169, 170 would be my place to want to see whether or not it can hold that support level. In the meantime, what is some other support levels to be watching for? There's very little support levels outside of the rising trend line. That's what makes this stock a little bit on the difficult and scary side, is that there's not a lot of huge key support levels because it's trading at all-time highs, and it's been doing so with very little pullback. So a pullback, maybe like I said, to this 50-day moving average, 187, there's a little bit of support there. But outside of that, there's not much else underneath it. So there's some vulnerability with Apple here. There's big vulnerability. Now we may see, because if you remember back on Tuesday, Starbucks reported earnings and it was selling off afterwards. And then yesterday, once the market opened, it was soaring. It was like one of the only stocks that was going up yesterday in the S&P 500. It did an incredible job. Actually broke out for a little bit, got a little bit of follow through today, despite the fact it was a difficult tape today as well. Strong volume, but the initial reaction was to sell the stock off. The exact opposite of AMD. The initial reaction on AMD was to rally it, and then it sold off during regular trading hours. So just because you're seeing Apple right now selling off doesn't mean that people won't get emboldened and want to buy the dip on this thing, because they're thinking that 189 is somehow a generational buy-in opportunity, like they've been doing with a lot of the big tech stocks of late. So also, if Apple does start to sell off, watch what its effect might be on Amazon as well. You could see it start to play out on Amazon. Maybe people start taking some profits there, because after seeing the Apple report not get fully embraced by Wall Street, that could actually have a little bit of a chilling effect on Amazon stock as well. All right, let's go and look at what stocks you guys are wanting to talk about here. John Massey, you have 6,000 shares in Apple. Should I sell them at 200 and buy them when the price goes back down to 183? I don't know. To be honest, this stock has defied the reality so much over the past, really all the big tech stocks have. And so knowing for sure it's going to get back to 183. I don't know how long the market wants to keep being completely irrational. I think Apple is way overvalued right now, but you could have said that through a lot of different points in time for Apple. I mean, you could have said it back here when it was trading at 113 back in 2020. You're thinking to yourself, this thing has gone straight parabolic. What does it do from there? It goes all the way up to 200 almost. So I'd personally, if it's me, I don't mind taking profits along the way. Even in my long-term investments, when I start to get some crazy profits in them, I'll start taking some, book some of the profits or try to take some of my initial capital out of the trade. With swing trading, I wouldn't have held it over the earnings anyways, just because I think it's too unpredictable to be able to predict how the market's going to react to earnings. So therefore, I'm not going to hold Apple through it. If I was in somebody else's shoes that was holding it through Apple, the rising trend line would have been my exit right there. So as soon as it broke through it yesterday, I would have been out of it, because to me, closing below that rising trend line was a game changer for the stock. So if it gets down to this 187 level and it can start to bounce, maybe that's an opportunity. If it can't hold that level, then there's really not much else to look forward to. Maybe some of these previous price points can provide some support. You have one at 176, you have another one at 179, and the previous all-time highs you have at 183. So to your point, 183, yeah, I mean, you could try to play that if it wants to bounce there, but this is the major support level that would be following the closest. We got Ryan Fairchild. What's up, man? That Yell squeeze was crazy. Didn't expect it to make that much on it, man. Hey, I'm glad you're able to make it on that trade. That was a crazy move, and it goes back to the fact that everybody on Wall Street wants a piece of that bankrupt stock. It seems like they're playing off of everybody else, saying, well, I'm going to buy it because everybody else is buying it, not because I think it's going to be a good company or that it's going to be around for a long time. I'm just trying to play that hype train. Hopefully I can get in early enough and sell it early enough as well to be able to make some decent coin. It goes from 125 all the way up to $5, but this is a stock. I mean, you saw it go today. It closed, or it was Tuesday. It closed at 390. And then all of a sudden at the lows yesterday, it's trading at 250. If you're chasing these things and trying to play them, you're risking a lot of capital. It better be some fun money that you really don't mind departing with. If you make good money off of it, that's great. But trying to base a trading strategy around it, it's a pretty dangerous game. Strong volume, but again, I would not be surprised to see this, by next week being trading at $1.50 or lower. So really be careful with those kinds of stocks. Now, let's see. Overall, we're getting to a point where everything is extremely stretched. I have a share planner reversal indicator that I posted on the public community board here on my YouTube channel. If you look at that, you'll see that we are extremely overstretched, and it's given me a very extreme bearish reversal right now. That makes me very tentative about when to add new positions to the portfolio. Yes, there's some potential with some of these different stocks. We talked about Coin, or we talked about ABNB bouncing off of these support levels, but ultimately we really need to see price come down across the board. We need to see some alleviating of these buying pressures that has driven these prices like Nvidia up to like 230 PE ratios here. And it becomes very difficult to trade with any conviction that the market can continue pushing higher at this point. So one of the things that I would be doing right now, I'm 100% in cash. I got out of my last position, AVGO. I had a third of a position there. I got out of that yesterday. I think I took like 3% home on that trade. Overall, it was kind of a boring trade. I held it since July 10th, so I didn't make necessarily a king's ransom on it, but I got as much as I possibly could out of that trade, I guess is what I'm trying to say. Overall, though, I'm 100% in cash. Would love to be able to see this market pull back some. If so, I might even short the stock to some. I had an order in for PSQ today. It didn't hit, thankfully, because wouldn't have quite enjoyed that reversal that we saw midday on the NASDAQ. But overall, I am looking to get short on it if the market provides that opportunity. And to John's question here, do I expect the market to go down generally? Yeah, well, I would have thought the market would have already gone down before now. I mean, the run that you've seen this year, that is not a normal run. It's I think it had a lot of retail chasing it because they have this recency bias with what happened during March 2020 when everything shut down and everybody started flocking in the Royal Caribbean and saw the airliners because they got so cheap, and they made a lot of money off of it. And I think they saw the same thing here in 2023. Once the market started rallying, they went back to those same names. You look at Royal Caribbean, just shooting through the roof. So I think there is a lot of recency bias with the retailers piling in back into the market, afraid that they're going to miss the bottom and miss the next bull run. Ultimately, when you get the market this crowded, when it gets this comfortable, when people get this complacent with their capital, that's usually when you're most prime for a nasty sell-off. What do I do in the process? I set up stop losses. I've been taking profits across the board, whether it's in my position trades, my swing trades. The only things that I haven't been messing much with is my dividend stocks. Am I going to listen to the earnings call here? No, I'm not going to listen to earnings calls. I don't think I've done that in probably a decade and a half, listening to an earnings call. The reason why is, as a technical analyst, I don't really have to follow that. I think there's plenty of people that are you can follow. There's plenty of names to follow on Twitter that will regurgitate everything that's said on an earnings call. It's not like they're going to call on me to ask any questions. That would be fun if they did, but there's just really nothing for me to glean from it. Everything that's going to happen in the post market's going to get priced in pretty quickly there. It's going to react to it as it happens. So there's really nothing, unless I was working for a big bank, for me to listen to the earnings call, and it saves me a lot of time as well. So in any case, let's wrap this up here. What part of Florida do I live in? Or what part of the USA do I live in? I live in Florida. So it's a good state. I know you guys got a lot of jokes about it, but I've lived there my whole life, and it's been a pretty cool place. And I do have family in Alabama. So a lot of family in Alabama, actually. So if you guys are wondering what I'm answering questions. I told you I answer questions. So in any case, make sure to like and subscribe down below. We do these. I try to do these on Tuesdays and Thursdays every week. Sometimes I have to cancel them, but overall, I've been pretty consistent of late trying to get to these. And yeah, like, subscribe. Appreciate you guys. God bless.